Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other global media, and founder of the world-acclaimed ethical sustainable investing information website Investing for the Soul. And please note my disclosure statement at the end of the podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By, presented by Investing for the Soul, March 29th, 2019. At the beginning of each podcast, I like to suggest that if any terms are unfamiliar to you, simply Google them. Also, you can find a full transcript, live links, and sometimes additional material at my podcast page located at investingforthesoul.com/podcasts. Now for the news to profit by for ethical and sustainable investors. In this edition, I'm going to cover several recent items that I believe are most important for news to profit by listeners. Our first story: why ESG is too nuanced for index investing, by Francis E. Tuite, ThinkAdvisor, the publication. The writer says that active management brings deeper analysis and nimbler choices into building socially responsible portfolios. Francis makes some good points why active management of funds, rather than just sitting on a group of stocks indefinitely, can be preferable. Among the points are, and I quote, active managers combine valuation, fundamental analysis, and ESG factors into their stock selection. A passive or index strategy does not encompass individual stock selection. Rather, stocks are added based on a positive or negative screen, without regard to valuation or fundamental research. A second quote: an active manager may create a select and concentrated portfolio, 40 or 50 names, while passive funds may hold a large diversified portfolio, in some cases over 1,000 positions, that due to liquidity needs, out of necessity, can include stocks with low ESG ratings. Francis says that the new Vanguard ESG US stock ETF includes Facebook and Amazon, which both now have low ESG scores by some analysts. Amazon for the treatment of their workforce, and Facebook, of course, for its data issues. So though passive ESG ETFs can be attractive from an annual cost perspective, check what's in them and see if their holdings agree with your values. Go to this podcast's blog page at investingforthesoul.com/podcasts to find out where to get reliable, sustainable, and ethical fund information for where you live. The second story: what are green bonds and how green is green, by Lyubov Pronina, Bloomberg Businessweek. Ms. Pronina, I hope I pronounced your name correctly. Forgive me if I didn't. A quick quote reads, because investors face the challenge of judging whether a note is fully green, that is a bond, for instance, regulators are working on standards to help guard against greenwashing or misleading claims about just how good a friend to the environment an issuer is. Close quotes. Green bonds go to existing or new projects that have beneficial environmental or climate impacts. $580 billion of them were sold in 2018. There's been a real problem of creating standards for them, though. For instance, how can you ascertain exactly what's green? So, now the standards are coming together. Issuers in over 50 countries have sold green bonds and include institutions like the World Bank and the EU's European Investment Bank. For a long time, ethical investors had difficulty in creating a fixed income or bond portfolio. Now, with the advent of green bonds, ethical and sustainable fixed investing is becoming a lot easier. Look into it if you haven't already done so, and get some quality green bonds in your portfolio. To get started, one good source for green bond investing is the Climate Bonds Initiative, which lists most of the green bonds out there. Our third item is the blind spot in corporate sustainability rankings, climate policy leadership by the Environmental Defense Fund. Here's a quote that gives the gist of the study. The authors reviewed 8 rankings by evaluating the methodologies that these systems have published online and that are available to the public. They assessed whether companies' policy engagement activities were considered in the rankings and how, if considered, they were tabulated as part of the company's overall rankings or scores. And most corporate sustainability rankings do little to encourage companies to engage in climate policy, as they neither recognize support for nor penalize opposition to climate policy. Close quotes. The Environmental Defense Fund has done a brilliant job in analyzing which sustainability screen stock indexes only include companies who are also screened for their environmental advocacy. The reason for such screening allows investors to better determine which companies are truly on board with combating climate change. Of the 8 major indexes, only 2 were recommended. They are Corporate Knights Global 100 and Influence Map. So that's who to go to if you really want to invest only in the most serious companies about climate change, but who also offer the potential of decent returns. My fourth item of news is ethical funds have never been cheaper as Vanguard spurs fee war by Bloomberg News. Quoting the article, the price war has come to socially conscious investing. BlackRock, Vanguard Group, and Deutsche Bank's DWS Group have slashed fees for exchange-traded funds that track companies performing well on environmental, social, and governance criteria. Close quotes. Incidentally, an insightful write-up on Vanguard's new global ESG Select Stock Fund by Morningstar's great John Hale, PhD, is worthy of a read. Get the link on this podcast's page at investingforthesoul.com/podcasts. Also, in my podcast of March 15th, I mentioned how annual fund fees for ESG ETFs were now often comparable to those of conventional funds. This article goes into some depth about that. However, I absolutely maintain that if you truly want a portfolio that reflects your deep beliefs and values, the only way to do that is to buy individual stocks. I make this simple with my 1-hour do-it-yourself ethical sustainable investing pays tutorial. See the link on my website, investingforthesoul.com. A fifth news story I want to cover is How to Evaluate Funds That Invest in Women by Debbie Carlson, U.S. News. Here's an interesting quote. Quote, because data around gender was so thin, Andrew Bihar, CEO of As You Sow, a California-based nonprofit shareholder advocacy group focused on ESG, says his group worked with Equileap to compile more information about corporate gender policies, including policies like training, career development, safety at work, human rights, and other issues. His group recently created a gender equality fund tool that analyzed mutual funds and ETFs, taking into account these different gender attributes and giving each fund a score. Close quotes. There are now some good ETFs that are gender-focused, and I covered them in my March 15th podcast in a commentary concerning an article, Who Runs the World? The Global Status of Women in Leadership. My next sixth story is quite revealing. Large fund firms' support for combating climate change is all talk, as proxy voting record shows bottom performance, by Eric Rosenbaum, CNBC. This is a great quote. A data analysis released by Ceres in early March shows that when BlackRock and Vanguard are measured on their up or down votes on climate change resolutions at stockholder annual meetings, they have among the worst voting records in the fund industry. Close quotes. So the voting data would appear irrefutable that the largest American fund companies don't walk their talk. Senior managers of some of these huge fund companies, including BlackRock's CEO Larry Fink, have been loudly espousing their love for ESG. I hope it's just a simple case that views of the fund's senior managers on ESG hadn't yet filtered down to the managers making the proxy decisions who are likely engaged with other concerns. I expect that in 2019 and 2020, proxy seasons will show much improved results. I suggest if you're concerned about how your fund company stacks up on ESG and climate change-related stockholder voting, see the Ceres report. Again, the link is on my podcast page for this show. And now the seventh and final story for this podcast is Investors Lose a Major Justification for Holding Tobacco Stocks by Lisa Pham, Bloomberg. Here's an insightful quote from it. In recent years, a flurry of European pension funds and insurers have begun divesting their holdings, putting pressure on the share prices. BAT had its worst year on record last year, slumping 50% as the U.S. Food and Drug Administration toughened its stance toward the tobacco industry. Philip Morris also slumped 37%. Close quotes. Some of you might think it unsurprising that tobacco stocks are down. However, until recently, most investors would have told you that tobacco stocks are great as they demonstrated terrific returns for decades. Well, I've been arguing for many years now that their days were numbered. In July 2010, I wrote an editorial on my Investing for the Soul site, titled Sin or Ethical Investing, Which Pays Best? There I said, quoting my article, over the next 5 to 10 years, I suspect that ethical stock portfolios could outperform both the sin and conventional variety. And it looks like I'll be proven right. Mind you, there's still some year and a half or whatever to go yet, but I don't think things will change much in that regard. So there we have it for this podcast. Just a reminder To download the transcript of this podcast and get all the links and additional information mentioned here, please go to investingforthesoul.com/podcasts and look for this edition. And remember, I'm here to help you grow in your investment success and investing opportunities that reflect your personal values. And please don't hesitate to contact me if you have any questions about this podcast or anything else investment related. I'll be delighted to respond if I can. A big thank you for listening, and please click the share buttons to share this podcast with your friends and family. Come again. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link there for my do-it-yourself ethical sustainable investing pays tutorial. And don't forget to subscribe to my podcast using whatever app or site you get your podcasts from. Now, as I indicated earlier, I want to offer full disclosure. That means I'll mention in the show if I have any direct interest or holdings in companies or securities I'm talking about. Also, any favorable or unfavorable comments I make concerning companies or securities should not be considered investment recommendations. And furthermore, I cannot guarantee the accuracy or incur any responsibility or liability for any information herein. Please do contact me. I love to hear from you. I'm at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.